One question that we approach and deal with on our show, this is a show devoted to the law for real estate investors. So Sean and I are attorneys, and we spend a lot of time talking about the legal reasons why you might structure things one way or not structure things another way. But one of the things that we come into contact a lot with is there are legal reasons to do things, but then there are tax considerations and tax reasons to either do things in addition or maybe to consider doing things um, slightly different. So somebody just coming into the space, how would you advise them to best start setting up what they're doing to provide them the best tax benefits?
Yeah, we start with a very important phrase slash question, and it starts like this: How you make your money tells us how that money will be taxed. And so the first part of it is real estate has so many different areas that you can get into. Which part are you interested in focusing on? Is this going to be wholesaling, fixing and flipping, develop and sell, or is this going to be a asset strategy, which is a long term hold? I'm going to buy it, hold it, rent it out, whether that's short term or long term rental or what have you, because those have two totally different implications. And as we talk about structure and we get into the conversations with legal, depending on which side they are on, we'll have recommendations on the type of structure we think would be the most tax efficient. So that's the first part: is what avenue are you going to go into? And from there, once we understand that, then the entity structure, the next part of that is how you make your money determines how it's taxed. How it's taxed tells us the most appropriate structure to mitigate against that tax. And so then we start to have conversations around, does it make sense to look at single member LLC versus multi member? What are the tax implications there? Especially if you're on the side of what the IRS calls a dealer, fix and flip, wholesale, develop and sell. Does it make sense to make a tax election to be taxed as an S corporation for the type of structure? Because all of those decisions, again, that we make on the front end will have long term implications down the line. And after we've figured those two things out, how they're making their money, what the most appropriate structure is, then we jump into a little bit more of the, I'm going to call it the accounting and bookkeeping side. How do we track the money appropriately? What does the flow of funds need to look like? Not just to help protect on the accounting side, but also legal reasons, right? We get into conversations around commingling and how you pierce corporate veils that way. And from there, the conversation really starts to evolve more towards the long term goals.